Hello and welcome and welcome and hello and welcome, guys. I was just sitting down here to give a little bit of a talk on an interview I had been watching due to my insomnia. Home from vacation, just couldn't sleep, but basically was watching the interview with David, the chief product guy at Galileo. Incredible interview. Looks like we're getting a half point cut. That's why the stock is going bonkers right now. Let me share my screen with you guys. So I have to rethink this, guys, because actually this is what I was going to talk about. Was this guy here, and this is a great podcast, Banking Transform podcast. If you have a chance to watch his interview with Derek White, I think he's done at least a couple. And this is an absolutely incredible interview. I actually go through and talk about how Galileo and SoFi are really a mining operation, disguised as a bank, and how they're using AI. He came out and said the AI. He's talking about, this centered on a big survey they did, and they're trying to understand consumer behavior. But the important thing is not that, because self-reporting is so erroneous. They're mining data. This is why, the old product that was called Relay, which is now called Financial Insights, um, you know, this product is extremely important because he's talking about how they use this data to understand consumer behavior. But guys, I'll probably get back to that video another time. There's just this is still called SoFi Relay on the old Google mapping, but they called it Financial Insights. So this is where they know every kernel of your financial life, so they can basically cross sell you a bunch of products and services. He talked about how that's being ignored with SMB. A bunch of different stuff like that. But obviously, guys, shorts are being cooked right now. I thought it was honestly going to be a quarter point, and that might be a sell the news event, kind of fearing that. But thankfully for all of us, that's not what happened. So, yeah, got the half point. Looks like got the half point cut, and volume spiked there. One huge candle. We'll just have to see what happens. The chart is extremely bullish, so this news should be really, really good for Q4 and full year guidance. Just, as bullish as it gets in terms of the news we're looking for. Obviously, it wasn't going to be more than half a point. It sort of seemed like the consensus was it was either going to be half or a quarter. So this is the most bullish news you could have expected for SoFi. Of course, I think, shorts are going to dig in their heels. I'll give you an update, the live short. The short has just been increasing the last week, guys. I've been out of town, so I haven't been able to monitor this, daily as I usually do. But shares on loan have gone back up sharply. Just at the end of August, they were 167. So that's only a couple weeks ago, all the way up to 216. The short, let's see, end of August had gone down to 178 million, all the way up to 200 million. So they've dug in their heels considerably. Let's see. I've got my main man, J Money, not a lurker, online here, feeding me some information. Yeah, oh, this is my own deal. Okay, so yeah, this is a good way to watch the chat. Thanks, not a lurker. I know it's a lot easier than looking to the side, but I got a couple monitors going. So the borrowed change, guys, is 4.23 returned. This is going to change because shorts are going to start borrowing heavily to kind of try to step on this rally, but I don't really think it's going to work, guys, because institutions have been buying in, and this just gives them all the more reason to buy in. A half point is going to spur so much demand, not just for student loans, but think about this. This is why the data mining is critical, because SoFi is going to be able to pick off those super, super premium personal loan customers. And that is the juicy, juicy, juicy net interest margin that makes SoFi huge profits. And that's just the bottom line right now. Of course, Galileo is going to eventually have massive, massive margins, but that's not going to get a huge boost from this interest rate cut the way obviously the lending products are. Let's say hello, guys. What do Sorry, guys. I don't know. I had some kind of technical difficulties there. I think I hit the wrong thing, but what else is new, guys? Story of my life. Let me get back to this. So it's up 20 cents right now, and they're stepping on it hard. So you have to believe, shorting, borrowing, whatever's going on. Let's see, guys. We got Javier M. Russo telling us it's a half a point. We got SJ Tavares. We got Dale P. What's up, Dale? How's it going? We got Drek in the house. We got Jay Gadsby. What's up, Jay? The greatest beard in all of you turders here, Jay Gatsby. We got the great Matt Flo, of course, checking in from SoFi HQ. We all know Matt Flo is actually the great Anthony Noto. No, we got Joel Madsen. Hello, Joel. We got Clap My Dog. We got the great Alberto Bertie Aviles. What's going on, Alberto? Hope you're having a good one, buddy. We got Trunk Monkey. Did Powell speak? Everybody's saying half a point. I haven't seen anything, guys. I've been just swamped here in the office, but I've been telling you and telling you and telling you this move is not over until $10.11. I think that's going to be where they really try to step on it. It's not $8. There's this sentiment. I saw this technical analysis video, which I have to just tell you, it was one of the stupidest things I've ever seen. It was a new video, and he was talking about how, this candle here on August 5th is lower than this, making a new low. So it's going to move down to new lows off of a sell the news event. I'm like, you think this? So if you look back here, obviously resistance or support is more 630. Here it's more 650. Here it's, $7. I don't know who can't see this stuff. That's a 601. I'm like, don't you see a failed stop loss raid when it slaps you across the face like a cold salami? If you do technical analysis and look at charts in a vacuum, like not understanding the shorting activity, not understanding, fundamentals, not understanding catalysts, not understanding basically anything, and you try to look at this candle and say that broke this support, you just don't know what you're talking about. It's not equivalent at all. This was consolidating here for a month. This is one day. It's not equivalent at all. So I don't know. People are trying to make that argument based on some Fibonacci, based on this one. It's just stupid. It's stupid. So many people, U-turders, trying to do, and the Chart Master is no expert, but just be very, very careful who you listen to. This is an upward trend. This is moving in an upward direction. There's nothing suggesting a breakdown. Yeah, the fact that it's overbought on, MACD or whatever, these other indicators, a lot of that is because the stock was artificially driven down into the sixes with shorting activity. So I think the fair value, and a lot of, people far smarter than myself think the fair value is somewhere 12, 13, 14. So the fact that they drove it down to less than half of it, dumping and shorting and scaring the hell out of people, does not change what the fair value of the stock is. And if you start to listen to the executives at Galileo and what they're actually doing over there in terms of basically setting up this data mining operation to collect the crumbs, as they talk about, you start to understand it's more than just a fintech company. It's more than just a tech company. It's like they are getting so much insight. It's analytics. It's data mining. It's what they're doing in sports. It's what they're doing everywhere. And it's what the financial sector has really never done. The host, I forget the host name. I have to apologize. There he is. He is a super, intelligent guy, and he's been in this industry, it sounds like, for decades and decades. He looks a bit like Hannibal from the A-Team, but yeah, I don't want to hold that against him. Very handsome man. But he has a depth of insight into these topics that are just insane. I listened to this interview kind of in the background. I'm gonna try to listen to it more carefully, but they essentially go through how SoFi is using data, how self-reporting is unreliable, how if you have an algorithm and you have smart people writing it. The key is you just have to ask the right questions. You have to give it enough data, and it's going to give you the right answers. It's going to tell you, how to communicate with consumers to offer them products that they're very likely to want, very likely to buy, that offers them value, does not annoy them. It's not a top of the wallet thing anymore. Because with electronic payments, you can just shuffle, what's on top. You can choose different things. They're talking about how people are generally satisfied with their bank, but they're also opening new relationships all the time with fintechs, with others, because it's seamless, because it's easy. And there's no cost to just sort of disengaging. If you don't like the relationship, you don't have to do anything. You don't have to go into the branch and fill out a bunch of stuff and sign a bunch of papers and have them do some high pressure sell. You could just stop using it. That's all you have to do. You can just ghost the app, just not open it anymore. I think the data mining nature of SoFi and how that's going to lead to cross-selling, less risk, more profits, and how that sort of complements what Galileo is doing, offering, the software as a service to financial institutions and others. It's just everything SoFi is doing sort of below the glass is so overlooked and underestimated by Mr. Market. They're like, well, it should be trading at book value. Absolutely not. SoFi is still absurdly undervalued. Institutions were paying over 10 for this thing. So many, obviously, of us retarders were paying over 10 for this thing. The SPAC offering was 10. You can always say, oh, SPACs are scams. I still think this stock's undervalued at 8. Dramatically. I'm not saying you should necessarily buy it because it might fall lower again. I mean, I was telling you to buy in the low 6s. I was telling you and telling people like, nope, it's going to go to 5. No, but why is it going to go to 5? Why? They're about to have a breakout, dramatic increase in EPS this quarter. Management's telling you that. I mean, look at this turd at Seaport. I mean, he just raised all his estimates. You want to talk about an analyst that just gives you nothing, absolutely nothing ever? Nothing. It's Bill Ryan with Seaport Global. I mean, this guy, he does all these financial institutions. He has no target price and just all holds. What are you supposed to do with that? I don't know. It's just frustrating for, people like me who want answers. Okay, Max Payne this week, $7.50. The volume is coming in at $8 calls, also ton of 850 calls, also quite a bit of, I should say a ton of $8 calls, and also a lot of 9 and 850 calls, almost nothing past 950. The puts are coming in pretty heavily at 8, and also pretty heavily 750, less so at 7. Also, quite a few. Let's see. Nope, not really any puts at 850. So you guys see where it is. It's all lining up at 8. You have to expect it to close somewhere in that neighborhood, but it's just very tough to say. Guys, welcome and hello and welcome. I was remiss. I did not welcome you and say hello and welcome, guys. Tune Poco Moss, welcome and hello. So we see the big rate cut. We see the big spike. Looks like a pump and dump. Sell it off really hard there, but it's going to go back up, guys. This is the news we've been waiting for. They're not going to be able to convince people that this is a sell-off. Volume is picking up. I don't think any selling, any spinning, any huckster, any carnival barker, any revival preacher, anybody is going to be able to convince anyone with a brain in their head that this is bad for SoFi. I mean, they're going to try. I mean, let's see. I mean, they're going to trot out the Chia Pet. They're going to trot out the bologna sandwich. They're going to bring out Morgan Fudley. They're going to bring out KBW. They're going to come out swinging, guys. They're going to bring out all the usual, douchebags. And they're going to say, oh, you know what? We changed our mind. We made a mistake. These rate cuts are horrible for SoFi. And they're not going to be able to explain why. It's not going to make any sense. I mean, anybody can understand this is SoFi's been preparing their balance sheet for this. They've been, holding back on all of their lending when things were looking more risky, and they're going to be able to pick the very, very best lenders and target the offers to them. That's why they've been adding banking customers. That's what these people now, SoFi is going to be able to look at the landscape. They're going to be able to look at the data. They're going to be able to say, hey, algorithm, Give me customers that have excess credit card debt, but great incomes. Their credit's still good. They're making all their payments, but they could really benefit from a lower interest personal loan. And they just target those customers with the very best offer. They can give better offers than anyone because they have a bank charter. They have their own deposits. They fund their own loans at a much lower cost than their fin turd competitors. And that's just the bottom line. It's not as complicated as the bears want you to think it is. It's not complicated. So you're going to see it in the EPS, and this quarter is almost over. When does SoFi fall apart? When does their loan book fall apart? When do we see the carnage that was predicted by, the five-headed bologna sandwich? When does that fair value accounting because what they don't tell you is fair value accounting, if defaults accelerate the loans, the losses they have to take, write-downs on those, that does not happen in a vacuum. That means the economy is getting really bad. That means we're going into a recession. That means we're going to have rapid rate cuts. There are going to be huge loan originations at SoFi. And what does that fair value accounting give you with those loan originations? It gives you front-loaded profits, which are going to far exceed any, marginal increase in defaults at the back end. It's just a disingenuous argument that takes one little snippet of reality without putting it in any context of what's actually going to happen. Fair value accounting is a stupid FUD argument. Oh, they're all stupid FUD arguments, right? This guy, David Fuhrer, however you say that, at Galileo, I don't know if he's Canadian, but man, he says right a lot. So when they hired, this is a press release from when they hired this guy, but again, 6-year run at Google Cloud Platform, and then he designed, he's a developer, all these things. So, Derek White brought him on board. He's a critical player in the team, but I just want you guys, I don't have time to go ahead and play clips of this. I want to, listen to it again to really get, but you can see in sort of my, psychotic flowchart kind of what's happening. And he talks a lot about AI, how Galileo's using AI. Legacy banks basically have to keep their branches open. 60% of people don't want people with their banking, but 40% do. And legacy banks have to keep all those branches open for those blue hairs. And they can't consolidate those branches to make them central to urban centers because, these older consumers who aren't online, don't do the app, they're not going to drive forever. They're going to go to the bank around the corner. So Bank of America, Chase, Union Bank, Wells Fargo, all these major banks that have these legacy consumers, they have to keep branches everywhere. Suburbs, country road, take me to the bank. I got a massive legacy cost. So SoFi is set up as a free cash flow machine based on cross-selling, which is based on their data, which is based upon their use of AI, which is based upon their strategic use of algorithms, which is based upon their data mining operation, which is the product that used to be called Relay and is now called, Financial Insights. And they want you to gain financial insights, but more importantly, SoFi wants to basically get all your information on every aspect of your financial life so they can sell you more stuff at the time you want it and make more money from every member. And that's just what this business is. And it's set up by a guy who's done this for decades and decades and decades and understands finance, understands the industry. And it's not just, guys like Chris Lapointe. You have to look at this management team within Galileo and the quality of these people and where they're from and what they're building and what their vision is. And I know it's hard to say, okay, wait for years and years until, but the product cycle is very, very long. It takes, at least a couple of years to acquire a customer. You go through these trials, and then from there, a year or two to onboard the customer. So it could be, 2, 3, probably even 4 years until you really start monetizing a customer from the point you started trying to sell them. But you will be gaining revenue from that customer for decades to come because they're not going to spend 3-4 years setting up with Galileo and then just change to someone else. It's way too difficult to change. That's, they capture that customer forever. People just don't see what Galileo's doing. The quality of the management team over there. They mirror the quality of the management team at SoFi. Anyway, guys, I got, totally sidetracked today. It's just one of those days. But if you look at the last aggregate short volume, I got a lot of work to do anyway, so it's better I get out of here. But 26%. This is the lowest you see. 29, 30. You just see this descending. Coming off a 63, I would guess this was a Friday killing options, but I'm not sure. I don't have time to go back and look. I know it wasn't 611, so that was Friday here. But you just see this descending 38, 31, 30, 29, 26. Shorts of just, I don't know why, the short interest raising. So the data on Ortex has just been a little bit weird lately. Anyway, let me see what's going on over here in the Chatteroony. Let me see anything new if they've updated the short interest, because I bet it's going up like crazy. Yeah, so you see it bottoming out here, and then this is going to go up. And I'm hoping the cost to borrow inches up and the shares available inch down a little bit. I really don't necessarily anticipate that happening, because there's just a lot of shares available, and they can obviously just borrow more at almost no cost. But I don't know, guys. Let me check in with you. I don't know, how high or whatever is going to happen today. Obviously, shorts borrow and step on this thing. This 830 level has been resistance. Obviously, popped up above that briefly. Leo Longevity, I see their paper hands are selling. Paper hands are everywhere, but I wasn't expecting that either, my friend. Wow, 50% wasn't expected. My good friend there, and I believe that's Korean. Is that I think that's the same gentleman who comments on down below. I forget your name. John Kim. I don't know. I can't remember everybody's name, but I definitely can't speak Korean. But anyway, so appreciate your comment nonetheless. And I hope that's Korean. If I'm wrong, maybe it looks like Korean. Maybe it's Chinese. Maybe it's Japanese. I'm just a fucking idiot anyway. Culturally illiterate, as they say. What's going on? Leo Longevity, clap my dog, drinking filtered tap water, so watch stocks go up good. But Neo is crashing today. I don't really know why. I'm trying, Jeff. I'm trying. Betting the short interest will exceed shares borrowed. Yeah, I mean, naked short, whatever it is, guys, they're going to try extremely hard to step on it, because there's just a lot of calls. And also, the shorts, I think a lot of the shorts flipped and other sort of more naive shorts came in. And I think, like I said, BlackRock, Goldman, some of these companies and the counterparties, the senior secured note deal, they can push this thing up whenever they want. So I think, some of the less experienced folk might have got on the wrong end of this thing. But I would strongly encourage everybody to subscribe to this Banking Transform podcast. This guy's really, really good. And when you listen to David, our chief product officer at Galileo, who's just spent the last 6 years with Google Cloud before coming over in 2022, his vision is with White's vision, but he is really, really good on the technical side and also on sort of understanding the vision, bringing those two things together and understanding that consumer experience is everything. Big banks are not constantly innovating the way, Tesla says. We're not releasing new models all the time. We're releasing a new model every single day. And we're encouraging everyone who works here to make constant improvements, simplify, efficient, better, less expensive, more reliable. He's talking about, why don't financial institutions do that? We should be constantly innovating. We should be constantly looking at data. Data is everything, and it's right here in front of us, and big banks aren't using it. The host gave an example. He's like, if you go down, you get a credit check to get a car loan or, test drive a car, you get all these things on your credit, all these dings, because everyone wants a piece of that. Everybody knows you're shopping for a car. So you get offers for insurance, you get offers for auto warranties, you get offers for the auto financing itself. And he's like, but your big banks see that on your credit report and they do nothing. They don't offer you a discount on an auto loan. They don't offer you a line of credit you can use to buy that car. They don't offer you a rate lock. They don't offer you they don't do anything with data. because they take customers for granted, because they make money, because they pay people zero interest on their savings, and they nickel and dime the hell out of you with fees and ridiculous interest rates on credit cards. People are waking up. They're also talking about the nature of banking and how people view financial institutions, people view fintechs, people view technology, how they want it to work. It's just a very, very insightful interview. It goes on for 52 minutes. That seems to be his preferred length of his podcast. Right around that time. And again, I'm going to try to watch it again and absorb more of it, because Galileo is so key to getting the multiple we want. Bold, Kramer came out and said SoFi is a fintech. That's what he's basically saying it deserves a higher multiple. If you read, somewhat between the bald hairlines. Anyway, guys, I got a ton of big dog work to do. I got to get the hell out of here, but I'll try to check back in with you guys a little later. Where are we going to close? I don't know. I don't see them really wanting to aggressively short this thing anymore. Like, what? Management's telling you it was all. I don't even think management was pricing in half a point when they gave their forecast. I think they're pricing in more like a quarter point. So I think they're going to raise guidance, for full year and for Q4 at the ER considerably. I think demand's going to explode. Home loans, student loans are key. We're getting them on cross-selling. All this data that they've been collecting on these savers. These savers are who you want. You don't want traders. You don't want credit card spenders. You want these savers. That's who SoFi has. It's money in the bank. Guys, 38 million shares traded. Stock's up 20 cents. No big deal, but I think it's going to go up, like I said, pre-ER or just after the ER, if it's good, around $10.11. I think that's the floor. I think it consolidates around that $10 level, maybe checks back around $9.12, something like that, but definitely up from there. I think this stock is worth like 13, 14 bucks all day. 3x sales at this growth with this potential is just ridiculous. And, the stock's moving up again on volume, 38 million shares. Like I said, perfect volume for us as bulls, 50 million, maybe 60 million if you go extreme. We don't want to see into the hundreds of millions. Algo's just working too hard to control the price. But institutions are going to buy in here. They see the writing on the wall. They see SoFi is going to be a free cash flow monster in the future, and it's set up to do just that. It's set up for, growing and growing and growing and scaling at very efficiently, adding minimal costs, and will just be making huge marginal profits as they grow their revenues. And the bears can say anything they want, but it's just all complete bullshit. SoFi wins, guys. SoFi wins. End of story. Thanks for watching. My name is Danny Deals. It's un poco mas. Half point. Bears got nothing. Shorts got nothing. Short weighing losers take the walk. Peace.